Hello, I'm Michael Sullivan. I'm the Chief Economist here at Moonfare. 2024 has been a critical year for politics and elections. We now have new governments in a whole range of important economies. It's also been a really important year for technology. In particular, the big technology stocks in the US have grabbed attention as they have outperformed. And this year, as we begin the year, the team at Moonfare is looking ahead to 2025, asking will these trends in technology continue and how will we see the private assets markets develop. And to frame this and put order on what seems to be a chaotic world, we've identified 5 themes or 5 pillars that will help us to navigate the private investment world. The first one of those is that we see catalysts emerging in the private equity world. The second is that we're now going to see the fiscal consequences of elections in the US, in the UK, and a range of other countries. The third one, we're very focused on technology, is really looking beyond AI and asking what's next after AI. And somewhat related to that, on the fourth pillar is effectively the rivalry between the big economic regions. We're going to see a lot of talk about tariffs and trade, but behind that, and pertinent to private markets, is this idea of strategic autonomy, investments in defense, in cyber and quantum in the US, Europe, and other parts of the world. And then lastly, we're very focused on risks, in particular looking at the Chinese economy as bond yields fall, indicating that that economy is slowing. Just want to remind you before I develop some of these themes, we've published these and we will continue to write on them in our monthly publication, the Satellite, and we also publish a whole range of posts on our website and on social media every month. And for clients at Moonfare, we have a monthly call for clients, usually the third week of the month. So please feel very free to dial into that, and also submit questions to me and to my colleagues on the investment team. I want now just to give you a little bit more color on some of the themes and the macro pillars that we're looking at. And I'm going to start by one that's probably most important to us, which is that we see catalysts emerging in the private equity and private asset world. And unlike the public markets, private markets have been in something of a doldrum for the last 2 years. We haven't seen as much investment activity and as much fundraising as we had in the previous 2 or 3 years. And there are now strong reasons to believe that that's going to change. If you look at the share price reaction of the big private equity companies to the election of Donald Trump, that industry is very close to him. It's something he understands. And we think we're already beginning to see an upturn in activity. What's very important as a next step is that we begin to see the unblocking of capital markets. We see more IPOs. In Europe, a whole range of fintech companies are now looking to come to the market. And as that happens, that will recycle capital across the rest of the industry. And I think there are also strong trends towards reduced regulation and a better business environment, not just in the US, but also in parts of Europe. What's also very interesting from our point of view is that a range of governments, the UK notably, are now beginning to think about having pension funds access private assets. And we think this is sensible. We think the long-term returns on private assets are superior to those, for example, on US equities, which begin to look very, very expensive. And it also allows investors to access a big chunk of the economy that they don't have access through public markets. So this would be, I think, a positive development. The second pillar, I think, just to begin to unwrap is the fiscal consequences, or in some cases, the fiscal hangover. The US is perhaps still the biggest, most dynamic economy in the world. It has a lot of debt. It has a big deficit, and unusually for this point in the business cycle, the deficit is very, very large, given where unemployment and growth are. So the onus on the government would be to we think, to grow the US economy very hot. That will help private companies. We do have a worry that it can push up bond yields. In other parts of the world, again, if I think about the UK, France, Germany, we're going to have an election very, very soon. Some of those economies also have large deficits. That constrains governments in terms of their investment policy. And we actually think that you will see more collaboration between governments and private investors, infrastructure companies, for example, to build out infrastructure, to build out green technology. So some of the long-term implications of fiscal constraints are very, very meaningful for private asset companies. The third pillar where we're really focused on is technology, and in particular artificial intelligence, where we've been investing for a number of years now, well before ChatGPT effectively enlivened the public recognition of the work that was being done in AI and machine learning. And in the last year or so, the investment team have made a number of specific investments in this area, and we continue to invest in funds that are active here as well. One of the things we're looking at is what's next after AI in terms of what are the companies who are taking AI and applying it to very specific data sets in finance or to very specific uses in healthcare, in drug discovery, for example, or in the areas of security. And we think that second wave in AI is now beginning to materialize and come through. Plenty of other areas are looking exciting. Space investing is a niche, but becoming more important in Europe. Across healthcare, which is a huge segment of the private equity and venture space in Europe, we're seeing some really exciting investments, and a lot of attention is being drawn to defense and security investing, in particular in Europe. The fourth pillar, which we will see played out a lot in terms of the media, is what we call strategic autonomy. I think the narrative on that will be led by talk on tariffs and trade. And really what we're talking about is the competition between the big economic regions in the context of this emerging multipolar world, a world that's dominated by 3 or 4 big economic zones: Europe, the US, and China. And what's interesting, if I'm a private investor, is that these regions increasingly want to equip themselves in terms of new technologies, and that can be AI, it can be cyber, it can be quantum computing, and plenty of interesting developments there in small European countries like Denmark and Finland, as well as, of course, in some of the bigger economies like France. And this push to strategic autonomy is already having an imprint on the investment landscape. The EU wants to launch a big defense fund. And of course, a lot of the work will be done by private companies, and a lot of the capital has already been provided and will continue to be provided by private investors. It's an exciting space, and it's one that's really only accessible through private assets. And then finally, we are cognizant of some of the risks on the horizon. I think from a financial markets point of view, the biggest risk is rising interest rates and rising bond yields. We're very focused on that. On a more optimistic note, in terms of geopolitics, we hope that this year will bring peace deals to the major conflicts going around the world. And then in terms of the major macro risk, the country we're really focused on is China. Risk appetite on the part of entrepreneurs is falling. Like some of the other economies that has a lot of debt, macro momentum in parts of China is beginning to falter. They've had a couple of stimuluses which don't really seem to have kick-started the economy. And one of the key signs, bond yields in China have been falling quite dramatically. So that's something to watch. We're very focused on the kind of measures that the Chinese government should take to get the economic momentum going again. So 2025 is going to be an exciting year. It's going to be another year where politics, economics, and investment are all going to be tightly interwoven. And the implication of that, I think, is maybe twofold. We see catalysts emerging for private equity and venture opportunities. And also we see some of the spillover, some of the side effects on governments, fiscal constraints, geopolitics, pushing them to be more active in the private company space.